They reported over $10 billion in revenue in the most recent quarter. That was a 10% year-over-year gain.
While many investors are looking for more speculative growth stocks, it's also important to remember cash is king.
And they also happen to be a cash flow machine. That's what investors love to hear, this idea of recurring revenue coming in.
MarketBeat's Chris Markoch is looking into 3 cash-rich companies.
These are companies that are generating cash, and then also, like I said, they're being able to convert that into the free cash flow.
Could these cash-heavy stocks help keep your portfolio balanced? Let's dive in. Chris, so great to have you back on the show talking about a really important topic for investors today. We're not looking at a specific sector. We're looking at a specific metric that a lot of investors like to look at to see how well a company is doing and whether it's something they might want to invest in. So let's talk about that metric first before we dive into the list of 3 stocks you have for us today. And that metric is cash flow. Why is this important? What is it? And what should investors be looking for?
Right. So we all know that when it comes to earnings growth, cash is king. And here, we're not just talking about cash, but we're talking about the company's free cash flow. So this is the amount of cash that the company has to work with beyond its debt obligations and the money that it pays out to shareholders. So this is money that it has on its balance sheet after that. So it's free cash flow. And specifically in the article that I wrote, I was looking at companies with a high free cash flow yield, which is indicative of the fact, again, that these are companies that are growing their balance sheet, and that should provide some security for investors.
How are these companies that have a good free cash flow, how is that different than some of the bigger tech names that we're seeing right now, some of the really popular investments that a lot of retail investors are looking at? How are these companies a little different?
One of the things that a lot of investors will notice from the list of stocks we're going to talk about today is these are profitable companies. These are solid companies. Many of the speculative stocks that some retail investors are attracted to today, they're companies that are generating very little revenue. They're not profitable. So obviously, if they're not profitable yet, we're not even having a free cash flow discussion because there's no cash to be talking about. So these are companies that are generating cash. And then also, like I said, they're being able to convert that into the free cash flow, which means that's just money that's staying on their balance sheet. And it just gives investors a lot of confidence that this is a good investment.
Yeah, so it's a good metric to look at, something a little different from some of the stock list videos we've done before. So let's get right into your list of 3 stocks out there that have really good free cash flow right now. Again, a quick reminder for our viewers, this is not financial advice. We're not telling you which stocks to buy. These are just some stocks to look at and continue to do your own research on, your own due diligence, and see if it's something that you might be interested in. So Chris, let's get to that first stock that you have on your list for us today.
Yeah, the first one may surprise some investors, and that is Salesforce. The ticker symbol here is CRM. At the time I wrote the article, the company had a free cash flow yield of 5.06%. So that's nice and impressive. What may surprise people is, okay, so Salesforce is, as a lot of people know, they're in that software as a service category. They were spending a lot of money to acquire their customers, to grow their company through acquisitions. That was actually eating away at their free cash flow. But now that cycle's turned around and they've got enough subscribers coming in. They reported over $10 billion in revenue in the most recent quarter. That was a 10% year-over-year gain. And about most of that, $9.7 billion, came from recurring revenue. So that's what investors love to hear, this idea of recurring revenue coming in, and that's turned the tables for Salesforce. Now they're taking some of that money that they were having to put back into the business, and now they're seeing that come in as free cash flow. That's setting up the company very well. Analysts love the stock, and again, this is just what analysts are projecting may happen over the next 12 months, but analysts really like it. They have a price target for Salesforce of $325.23, and that's a 33% gain from where the stock is right now. And that would be a nice turnaround for the stock, which is down about 26% year to date.
Yeah, I think that's an important thing to talk about for investors out there. If you pull up the chart, you're looking at this, you're like, why would we be talking about a stock that's down so much right now? Let's talk about what it could take to turn that chart around a little bit.
Well, a lot of it is just going to have to do with investor sentiment right now. There's a sense that a lot of companies, such as CRM, are overvalued. A lot of investors may just consider a lot of these stocks just too expensive right now. However, Salesforce reports earnings at the beginning of December. I believe it's December 3rd. So that will be something for investors to watch. If that report comes in strong, you could see this stock take a nice bounce off of where it is, because the chart's showing a pattern that shows a double bottom happening where it's hit a level that's acted as support a couple of times. So I think all it might take is a nice solid earnings report and you could see the stock go up.
Yeah, an earnings report is always something that can help a stock turn around. I'm so curious to see when a company is showing, good free cash flow, it's showing good, continued, consistent revenue coming in. Why do we see the pullback like we've seen in Salesforce?
The pullback here, I think, is again largely just due to its valuation concerns, and I'm not necessarily sure that those valuation concerns are really founded. They're trading at about 32 times forward earnings. That seems a little expensive, but not necessarily for a software company. And analysts are projecting the company to have about 12.7% revenue or earnings growth, excuse me, over the next 12 months. So I'm not necessarily seeing that the valuation story is strong with this one, but Salesforce is going to be one of those companies that if other technology stocks are being dragged down, Salesforce is probably going to go down with them.
Yeah, even if some of those tech names do see a pullback, they're still some of the hottest stocks of the year. But I think, Chris, the big question is, will they still be the hottest stocks next year? We just put together a brand new research report out looking at the top 10 stocks for 2026. If you'd like to explore some more information on those stocks for your own research in the new year, you can scan the QR code or click the link in the description to get more education on MarketBeat.com. All right, Chris, really interesting first company with a lot of strong cash flow right now. What's the second name on your
Yeah, the
list?
second name I have on my list is Applied Materials. This is a semiconductor company, and this company's it doesn't grab the same headlines that Nvidia grabs or Advanced Micro Devices grabs, but it's kind of a quiet little powerhouse. Has a 3.07 free cash flow yield, and it has exposure to the idea of chip fabrication, foundry equipment, materials engineering, all of the stuff that's going to be enabling AI and data centers and next gen computing. The company was able to build up their free cash flow despite doing $1.4 billion in buybacks and dividends in the last quarter. And it says it has a stated goal of delivering 80% to 100% of its free cash flow to shareholders over time. So, this is one that if you believe that we are in a semiconductor super cycle and that we're still in the early stages of that, then Applied Materials is one that a lot of value and income investors are going to want to look at.
Yeah, this one is definitely an interesting one with the whole AI movement and all the investment going into AI right now. But like many of the AI stocks, this one had a little bit of a pullback earlier this week. What's going on in the tech sector in general, especially these AI and AI
Yeah.
infrastructure
Yeah, I
stocks?
think in the case of Applied Materials, they reported earnings on Thursday, the 13th, after the market closed. So I think the pullback was probably being done in anticipation of what the market might be seeing as disappointing results or perhaps disappointing guidance. A lot of times there's a little game that goes on among traders where a stock might get pulled down a little bit before earnings. And if the stock beats, that gives them a little bit more upside. That's something that retail investors have to just be aware of. But again, I'm looking at Applied Materials as more of a long-term play. And again, that's just because very solid free cash flow. Another reason for that pullback could be that the stock was trading slightly above its consensus price target. So heading into earnings, you were also seeing analysts raise their price targets to well above the consensus. So I think really this is investors were waiting on that earnings report story, and that can cause a lot of volatility for a stock like this.
When we're talking about applied materials, I want to talk about competition for what they specifically provide in this AI sector that we're seeing so much growth in right now. Is there a lot of competition, and where do they fall, or where do they land within that competitive story?
They're competing more in the areas of autonomous driving and some of the other industrial applications. They're not necessarily going to be a company that's going to be going head to head against the NVIDIAs or the AMDs for that data center market. That may be unattractive to some investors. On the other hand, it is a niche market that is expected to grow in the next few years, and that could be an opportunity for Applied Materials, certainly.
All right, interesting stock to look at. Let's go on to the third stock you have for us today.
Right. So now we're going into the biotech area. Now, when we want to talk about speculative stocks, the biotech area is rife with those types of stocks. Gilead Sciences is not one of those stocks. This is one of the blue chip names in the biotech sector, and they also happen to be a cash flow machine. Um, the company has of the three stocks that we're talking about today, this has the highest free cash flow yield at around 6.19%. The company is anchored in proven drugs that are already in the market and helped the company generate $7.7 billion in its most recent quarter. The specific products that they have are there for the treatment of conditions like HIV and also hepatitis C. They also have a growing oncology portfolio, which of course we all know that's in the spotlight a lot today. So that portfolio has, I think, 5 candidates that are in phase 3 trials, which means investors could expect that you could start seeing new commercial drugs come on the market in the next year or so, as long as those trials go well. And that just takes you back to, again, Gilead's just a cash flow machine. It is a company that pays a dividend in this sector, and they've been growing that dividend for over 10 years with a dividend yield of around 2.5%. So that's pretty nice. Once again, you're looking at a stock that's trading right around its consensus target. It's trading at around 127. The consensus target's 128.83 as I looked at it this morning. But, here again, this is a company that they just reported earnings at the end of October, beat on the top and bottom line. Both numbers were higher on a year-over-year basis. So the stock's gotten some lift after that earnings report. But again, this is a stock that it's a good stock for investors who just are looking to accumulate in a stock that's going to reward them over time.
Yeah, this is interesting. A totally different sector, like you said when we started. I think that what I want to know about this for investors, I'm sure what investors are wondering when we talk about biotech, there's always those risks involved with biotech stocks of a bad news report, a bad trial, something like that happening. Does Gilead Sciences have the same kind of risk associated with potential of any kind of headline or
Right.
drug issue impacting the stock and their cash flow?
So I think it's a matter of perspective. Any biotech, you could be talking about the biggest names in biotech. They're going to face those concerns if a trial doesn't go the way it was expected to go. If there's a recall or any other thing that happens, that's going to have a negative impact on the stock. The question is, how big is that impact going to be, and how long is that impact going to last? And with a company like Gilead, any effect from negative news like that is likely to be short-lived. And again, that's just because the company has a proven base of revenue and earnings that they can point to. Whereas some of these speculative biotechs that many investors love because they might trade for under $10 or under $5 even, they don't have any revenue, or the revenue they do have might be from grants that they're getting from universities or the government or something, and they're not profitable. And so for them, the drugs that they have that are in the clinical stage, that's it. That's all they have. So if they fail a trial, or if the trial doesn't, if the trial has less positive results than they want, that can cause a lot of investors to just sell first and ask questions later.
Really good point about this company. I think that
Yeah,
diversification, having many different kinds of drugs is what helps companies like this in biotech have that strong cash flow.
right,
I think let's close out the conversation today just talking about the importance of looking at fundamentals for retail investors, especially in the market environment we're seeing today, where there are so many new tech companies, new ideas, new startup companies that are in those pre-revenue
right.
stages, things like that. What should investors be looking looking for, and how important of a role should cash flow play and how they're evaluating a stock?
Yeah, so there's a lot of ways I can answer that, and I think this goes back to what we were saying at the beginning, Bridget, is we're not trying to give anybody financial advice. We're not trying to say you should invest in these stocks, you shouldn't invest in these other stocks. But a lot of the answer to your question is going to depend on an individual investor and their own risk profile and what they're trying to gain from owning these stocks. A lot of the stocks I mentioned today, these are nice free cash flow stocks. They're going to be there when you need them. They're sleep well at night stocks in the sense that you can own these and you don't have to be constantly checking your portfolio and seeing, are they up, are they down? They're not going to make these large price swings that some of the other stocks can. That may not be appealing to some investors, but that's where fundamentals matter. If you're really interested in stocks that are going to be stable and are going to be there for you in the long haul, you really do want to pay attention to a metric like free cash flow, because that really does speak to the solvency of a company. It's really no different. People can think about it of their own household budget. You know, if you've got that, if you've got that leftover money at the end of a month, that's good. And that's what we're trying to talk about. You've got companies that are generating positive free cash flow after they've accounted for servicing their debts and in reinvesting in the business. That's what you're looking for.
Some really good information for investors to consider today. Chris, thank you so much for your time. I'd love to hear from you, the viewers out there. Do you look at free cash flow? Is this a metric that you're often looking at and you care about? Are there other metrics that are really important to you when it comes to looking into the fundamentals of a company? Let me know your thoughts in the comments and what you think of the 3 stocks on this list today. We'd love to hear from you as always. Thanks again for watching, everyone. And as always, happy investing.